Good day, fellow investors. So this is a business. Dividend Aristocrat has been increasing its dividend for the last 25 years, and we have followed it and included it into our little YouTube portfolio. Put a link in the description below for that. And I said I'll do a deep dive to see whether it will just stay in the YouTube portfolio or it will also be more interesting for me. If you want to read this rather than looking and watching at this, you can check my stock market research platform, see a little bit what I do. And here under the top part, the premium part, you can just read it here under free preview. If you enjoy reading, you can download the PDF, share whatever you want, and also check what I do. Maybe the research that I do, the time that I spend here will save you your time with investing ideas, with portfolio structuring, doing what others don't do, being greedy when others are fearful. So I think that I'll save you at least 100 hours in a year. 100 hours, I'm sure it's worth more than 500 bucks to you. That's the minimum offer, and everything else is then for free. Let's go back to this Dividend Aristocrat. So it is a French company, but it is mostly making its money in Africa and the Caribbean. So it is a business that gives you exposure to Africa, the Caribbean. It is a fuel company, so in distribution of fuel, liquid gas, bitumen that they use for asphalt, infrastructure in Africa. And most of the profits come from Africa and the Caribbean and less from Europe, about just 15% from Europe, so that's not that much. So they have their sections, they distribute that, so they buy the oil and then sell it forward. So they are, let's say, traders, they are a margin business, they don't really depend on the price of oil like oil producers do, and they also don't depend on the electrification because you won't see many Teslas taking off the world, and Elon Musk hasn't started a factory in Africa, so their things will likely continue like those are going now for a while. So you can see here the distributions, of course, French company, French colonies, but that's how the world works. And then they have been growing a lot over the years, decades, through making acquisitions here and there. So a lot of acquisitions. They just recently made the new acquisitions of Photosol, so where they will enter the solar business and maybe even then enlarge that one and use the know-how to do that also in Africa. Guess what? There is more sun in Africa than in Europe. But you can see here the earnings before interest and taxes split. Africa is 50%, Caribbean 41%, and I correct myself from before, Europe just 11%. So this is an African / Caribbean company with some business in Europe, not a French company. So very interesting how these things work. I went through the annual report. Whenever I do a deeper dive, I look at the details into the annual report, but I'll stick to the presentations as it is easy to write a report than from an annual report. They also own 9 ships, so they are integrated into that logistics. They made this acquisition, 376 million in cash, plus taking over the debt of those companies that they bought into the solar. I don't like this. It's not something that you would say, oh yes, let's go into the solar business, the business where everyone is going in, and the owners of this sold it. But if they just don't lose money, that will already be something. However, they did take a lot of debt on that, and they expect the first profits to come only in the year 27. So nothing spectacular, a little bit of EBITDA up, but EBITDA is earnings before everything that matters. So nothing spectacular here. Okay, maybe they will be able to get better bonds, better financing. There are always these small little things that help a company, and that's why they might do something or not. But a lot of millions will be spent there, and also very much increasing the risk of the business and therefore also of the investment. The targeted rate of return is 7%. Of course, interest rates when they bought and now are still low in Europe, but you never know. Perhaps we'll hit 7% here too, and then we are in trouble. We'll discuss later the finances and the balance sheet, and then you have to see how this fits you. They expect, of course, growth ahead. That's why you paid so much for such a company. And let's focus on the real business, the one that makes money. So they have some terminals, storage, distribution, retail, ships. So let's say not sexy business that makes money in countries that when you finish Harvard, you are not, oh, I'm going to work somewhere in French Africa. Simply, they know likely the business, how it works, where it works, what to do, how to, let's say, stay afloat also in these countries. And they manage to keep profits relatively stable over time, despite the fluctuation in oil prices. They do that well, grow, focus on repaying a little bit debt or focusing on getting a better structure, more cash, and they are planning to do more acquisitions, buy more things of their kind of businesses that should still be there, especially, okay, forget about Europe, forget about the US. Oil is very likely going to be here for longer, and their growth opportunities are also focused on Africa with increasing energy consumption per capita. They have a joint venture with terminals all across Europe, and the above brings approximately 100 billion for the joint venture, thus 50 million for Rubis. As I said, bulk liquid storage. Now, on the investing and finances, their strategy is to consistent acquisition, grow, take that, increase their portfolio. They did well over the last year. They increased the dividend. They are liquid. They are a dividend aristocrat, as we said at the beginning. A very high payout for the dividend yield now at 6, 7, 8%. So nothing wrong with the company paying dividends, growing, taking that. That's a little bit a leveraged play if you include it in your portfolio. They say it is low leverage. Now, there is something that's called non-recourse debt. So this is Rubis, and then they have, I don't know, a solar plant on something, and the solar plant takes the debt from the bank, let's say, or from investors. And if this solar plant doesn't see any sun, Rubis is not attached to it. So non-recourse debt, the bank cannot go to the owner of the solar company. So there is a lot of such debt. With all these infrastructure businesses, you can do that. So that is the positive. So I haven't dug much deeper into this debt thing because I know that the market might not like if there are issues and not understand that there is no connection here, which is something that as an investor, I'll keep on watching this on YouTube. I think we have 15% of our YouTube portfolio in it. The business has grown 3x over the years. They did a lot of share issues up till 2020 somewhere, but then they started using more debt as it was likely cheaper. So that explains the acquisitions, the strategy there. And this is just an example from 2013 where they used 150 million to buy BP's LPG retail operations and consider an equity issue to do that. Nothing wrong. 400 million cash available, already paid, I think, for Photosol. So nothing wrong there. But then when you look at the balance sheet, you see 400 million available, 800 million of cash, which is a lot. But then also with infrastructure, they have 1.7 billion of goodwill. I prefer buying infrastructure at book value, but okay, they do the acquisitions. and they pay. If the deal is good, they likely take on the debt that is also there, the current portion, which means that a lot of short-term debt that increases in cost fastly with increasing rates, and there is 1.3 billion of long-term debt, in total 1.6 billion of debt, which is a significant hinder. And the reason why I will not put this onto the covered stocks on my research platform, because yes, everything looks good, it is a good risk and reward, you will get the dividend, but there is this risk whenever you take that. There is always the risk of unknown things, changes, politics, taxes, Africa, this and that. And this also explains why the company is relatively cheap compared to other investments. So the cash flows are there, around 100 million, 150 million per year. That allows for the high dividend yield. Apart from that, they should be making more and more money as their assets remain there, do business, need less investments over time. They are investing a lot in cash acquisitions, as you can see here, year after year, 264, 300 million, 500 million. That's a lot of money. They issue a lot of debt. They pay a lot of dividends. And therefore, if you look at their cash flows before expansion capex, if you calculate in also the expansion capex, that's why the debt is going higher and higher. But before expansion capex, they get to 179 million. That's a yield of 7-8%. If you can get that 8% dividend, 7-8% dividend, 5% growth, that's a great return of 12 to 15% over the years. If the market likes a little bit more, then higher, but I wouldn't expect here the market to like it more. I would more expect it to just be happy with the 7-8% dividend yield, and that's it. I did a quick valuation. As here is the 7.4% dividend. Here the market was exuberant. Maybe it will get exuberant. I think it was Africa was hot as an investment. If Africa gets back as being a hot investing thing, then maybe this will also rebound, and in the meantime you get a nice dividend. I made a valuation, 3% dividend growth per year to continue being a dividend aristocrat, 10% expected rate, multiple of 15, P ratio down the road, and the intrinsic value is 27 euros, which is in line with the business. If they grow 5%, then it will be a little bit higher, so then you can expect a better return there. But nothing wrong with this company, nothing bad, but I'm personally looking for better, lower risk for similar things that would already fit me. So I'll just keep continuing looking, researching. That's what I do. And as I said, check my stock market research platform if you want to see all the details of my research, how it works. We did well over the last 5 years with the performance. I hope we'll do even better in the future. Thanks for watching. I'll see you in the next video.